Hello, today is Sunday, the 30th of October 2011. Before we get into the charts, I want to talk about a couple of shows regarding assassins and mind control. One is a little bit older, that is Jesse Ventura, which is Conspiracy Manchurian Candidate. I'm not going to put the links down below, although I'll write down these names. And the reason being is because if you're looking for anything on the internet and you're looking to search, merely type these into YouTube and you'll be able to watch it. So this one came out in 2009, I think. And basically, what Jesse Ventura did within this episode is he talked to some individuals who are pretty much programmed killers, well, one in particular, and do a very small test within how this works. And I really, really mean a small test. Now, Derren Brown didn't do the most smallest of tests. The show is called Experiment. It started about a week and a half ago. There's been two episodes. The second one was on a game show. I'm not going to talk much about that, but this one in here they literally see if Derren Brown, who's a very good hypnotist, can turn somebody into an assassin. Okay, let's get started now within the charts. And we'll get started, and we're going to start with the US dollar index. I'm going to compare two charts, one of which is this one, the DXY. The other is UUP, which is an ETF that is meant to track this dollar index. Now, if you notice on this chart, you can see situations where, say, the market closes here, opens here, then you got this one, and in here. The reason for this is because this data from freestockcharts.com has not been changed. It has been set to take it as they show what the open, high, lows, and close happen to be. You'll see a lot of differences. You can look at different things like where the strength is, the Fibonacci levels, what they're doing within Fibonacci, how much they're both up in the last 100 or 20 periods. There's a lot of big differences. But the one that I want to talk about now is notice the last 2 days. What we see on this chart is this second most previous day, it had a sideways consolidation within this range, hanging in within the 18 period average of closes. And then on Friday, it just broke down with a 1.8% loss. Now let's move on to UUP. And here we see more of these gap opens, but on Friday it had a big loss after falling from within this trend. Things are different here. It was Thursday when it had its 1.8-ish% loss, not Friday. In fact, the Friday session, it pretty much broke even or up about a penny. Probably exactly a penny if it's 0.05%. It never did fall from this average since, and here, this is where it fell in here. So two different charts, basically. Also, what I want to point out, let me just go back to the DXY again. I was saying in earlier videos what's going to happen if it actually finds resistance at this 80 level. How how bad it would be for the U.S. currency, basically. I don't know about you, but to me, thus far, this is like looking like resistance at the 80 level. Now I'm going to do an update on silver in two different markets. I did my last update on August the 19th. I'm not going to talk much about this. If you want to know more about what this means, do a YouTube search for silver in two different markets and you'll see the three videos that I've done within it. Now the blue line represents how silver has fared since the last update within the time frames of 9:30 a.m. Eastern to 4 p.m. Pacific, Eastern time, and then the opposite or the other times from 4 o'clock p.m. Eastern to 9:30 the next morning is the red lines. This is a simple calculation that anybody can do. You take the SLV ETF market, and the gain for the blue line represents the close of the price subtract the open, because that's the 4 o'clock price subtract the 9:30 price, and you divide it by the 9:30 price for percentage gain or loss. Therefore, for this one in here, you take its open at 9:30, subtract the close at 4 o'clock to get the difference of how much it gained or lost over that period of time, divide it by the previous close. Again, you'll get the percentage gain or loss. Normally, the U.S. market's been in a very large downtrend for so many years, whereas the markets overseas have been doing much better. Within this case, when the market was going through its large fall, it occurred within both time frames and more so or more aggressive within the non-US hours. Now let's move on to the actual silver chart. And I'm only going to show the weekly chart for silver on this particular video. And I got to stress big right now, or point out big, how big this line is. It states 31.21. I have 31.40, which is pretty much the exact same thing anyway, in or around 31.40, as it is part of the Fibonacci upside series. The one above this would work out towards this high. You can pretty much ignore this level here, although maybe that might be where we find support if it does bounce from this level. I'm thinking right now that it's not going to go down here. And I'll talk to you why within the gold to silver ratio, although it very easily can. So therefore, the level I'd be looking below here would be roughly in around here, because the level of the Fibonacci goes from 48.36 in here, 31.40 here, and then again at pretty much 21. $20.94 to be exact. But like I said, there really isn't much for exact because it's always ballpark percentage within. Because the level here was 48.36, it came to 49.81. That's a difference of about $1.50 or 3%. It's pretty much a hit. Therefore, if this area does find support at this mark, then it's at a major level that shows that we've had a decent sized correction. It's pretty much whenever that's ready to get going, because the whole way that the market moves prices is pretty much not, I don't think it's not logical and it's not sane. I think that's the better way of pointing out. But people are understanding a lot of this information, and because the suppression is now coming out, the likelihood, of course, for currency surviving is not good. Okay, now let's move on to the gain. The gain is that of 12.53% for the week, which is a pretty decent sized gain. And if you look at the size of this green candle compared to all the other movements or all the weeks since April of 2010, it does seem as if it's had the greatest gain of the entire bunch. This is a logarithmic chart, therefore it is designed so that the size of this candle will be exactly, for example, if the size of this candle is the exact same size in here, it would be the exact same gain, because a lot of linear charts, you can see how you'll have larger movements on the higher prices, but in reality, a lot of them may not be as grand. So let's look at some of the top weeks that silver has had in the last 10 years. This week's gain of 12.53% represents the second greatest week for the silver market in 10 years, basically. And what's interesting, if you look at the gains since 1968, the fifth best, excuse me, even the 10th best is above 15.85%, because there is not one single week of the top 10 in silver's history, or even since 1968, using LBMA data figures, that we've had a week of percentage gain in this level. Therefore, when we take a look at this information, we can see that the top gain was in September of '08, which was obviously a counter trend rally within a large counter trend rally. Counter trend rally means going the opposite direction of the trend. And when we had 2008 in September, the market was going lower, but what happened was it had a gain of 15% up to 1257. It obviously went down to 846 a month later, so that was a counter trend rally. The entire rally of going from 21 to 8 was a counter trend rally within the primary trend of that being bullish. So we move forward to the better gains. The third best is 12%. '09, you got 2011, and you got 2009, pretty much around 10. The 13th greatest, and this is the basically the first one in the last 5 years. The last out of the 5 years was 9%. 16, 8.4, 20 was 822, and 99 was 417. Now let's look at the difference of these kind of numbers within these kind of numbers. Really, there hasn't been a massive week to the upside. If 15.85 is the greatest, and the 16th and even 20th greatest is 8.22%, that shows you it hasn't really occurred yet. I have predicted that there's a really good chance that very soon we will have a week where the gains would be greater than 25 or 33%. So now let's look at the worst weeks over the last 10 years. And the worst one goes back to not too long ago, May the 6th, 2011, where it lost 26%. That was the original crash going from 50. Then the more recent one going from 40 down to 31 at 23% is number 2. Got 2008, 2008, 2004. But notice number 20 here, which is very similar to numbers 3, 4, 5 area, are not within this example. In fact, 26% down translates to a much higher percentage up move. Reason why is going from 100 down to 74 is that of a 26% loss. Now, if you go from 74 to 100, which would be the exact opposite sort of scenario, then you'd be looking at gains of around 35%, 36%, rather than that of the 25% variable. After all, a market can't go lower than 100% down. If a market goes up 200% or triples its value, that's the same as 67% down. All right, so now let's move on to the gold to silver ratio. And I've been asked so many times where people think, well, where do you think that it's going? And I have my ideas, and I'll share them with you. Whether it occurs, well, we'll wait and see. But I've been extremely patient in the waiting to really get much gold at all. And the reason why is because I find gold way too expensive. And I'm not looking at gold at the $1,800 or $1,700 price. To me, those are all phony levels because the currencies in itself, to me, are that of phony. And what's going to happen with gold and silver when we no longer have currencies? Well, one good answer might be that we'll have to stick within a chart like this and so on. Earlier, I was doing a silver chart for how much it was priced in gold. What's interesting is this level in here worked. Well, we'll get to that when we do a shorter chart, but it worked out that 1 ounce of silver, or excuse me, 1 ounce, yes, 1 ounce of silver was worth the same as a gram of gold. We'll get into that just a little bit later on. But the Fibonacci levels that I have this $13.99, pretty much 14, and $100.78. And again, you can pretty much say 800. The historic ratio is in or around the 15 to 16 area, which is pretty much the same as this area here, just a decent sized pierce below. And it really was a fake move because it retraced back up within the primary uptrend range extremely fast. This, of course, was the primary trend at the time. And a lot of times from failed moves creates fast moves. Here's the kicker, though. How big of a fast move was this, and how big of a failed move was this? The failure was a pretty decent sized failure because it obviously had a pretty decent breakdown. Only situation was it really didn't have the greatest of fast moves, although it did have a decent sized one because it did manage to break through this resistance level of roughly at around the 47 line number and gaining over double its value. But again, that's all it did. The Fibonacci level here, which was hit on many, many occasions. Now, it did hit here, but I really can't count that because the Fibonacci wasn't established until it hit this high. And as it's going down, you're in here, you're saying, well, where are we going to bounce? Well, if I calculate Fibonacci from this high and this low, I would think 47.40. And it would have been where it did bounce from because we had the bounce on 1, 2, 3, pretty much 4 occasions, and then it gave in. And there's a lot of people who were saying back then, oh, this is an area where the ratio always finds support. Yeah, it's a ratio where it always has in the past, but you're in a situation here where you're unable to make a higher high. Well, for the most part, it looks like it technically did, but it was a matching high. Thus, it created a double top formation, which is where you have two highs in or around the same area. The liftoff point gets hit three times. One, two, three. So basically, all you're doing is making a pattern something like this, making two reverse U's around the same shape. Yes, this one is wider, but the whole point of the nature is that it went from point A to point B, back to point A, back to point B, and then back again to point A. That's really all I'm looking for. And then it broke down below that level. And where does it hit? It hits somewhat close to that 29.74 level. Now these numbers only take one entry per day. That doesn't take the highest, it doesn't take the lowest, so most likely it was higher than this. And most likely it was lower than this. However, I don't think the silver to gold ratio got much below this number. It was higher than 29.74. This number represents this line, because the levels in which the ratio was pointed out was when silver was at $48 and like 50 cents. So you might think, well, when silver was like 50, what was the ratio then? Well, from the highest point silver was at to the highest point gold was at that time frame, if you do the ratio, then what you'll get is pretty much the same number that I have here, which is 31.44. I've just shortened this time span out. So now the Fibonacci levels that I'm going to use on a much shorter term time frame is this level from 83.79 to 31.44. Now what's very interesting is after it hit this area in here, which was close to that Fibonacci support line, it rallied very fast from this mark, consolidated for a little bit amongst this 45.72, the first Fibonacci upside retracement. After getting by, it shot right up to this level in here, and now since then has retraced. Therefore, if you think like me that the long-term trend for this chart is really going a lot lower, then where would you think after this bounce we would stop going higher? And the answer would be 57.62. So we've been there. Now the question is, how is it going to react from this point? Because you want to mainly keep your attention on these two lines. We're in the middle of this area now. So the question is, if we can manage to come back up to this 57.5 level without going down in here, then you merely increase the chances that you break resistance. That's pretty much what's best way of pointing it. If it continues to go lower down to the 45.72, then you would expect a bounce from this level. But again, if you're looking for this to be that area where we're going to be topping out, you would expect a lower high. And then when you get a lower high somewhere within here, now you increase the chances that you take it out, and you might do something like that. And maybe it just keeps going lower because the first support level worked. The second one said, nope, it's going to keep going down towards the downside. And then when we look back at the longer term point of view, I'm looking here now at a guaranteed failed move. Now, like we've seen here, not all failed moves are generally always going to give you those superior fast moves. And the failed move is either the failed breakdown below this significant support that never continued the market lower. Because if it does something like this, you're like, okay, once it breaks through this resistance here within this failed move, then we're probably going to at least test the 101 level, say, as the failed move. But if we continue to go lower, then you'd end up having this little area here on the break above this level to not find resistance. Because if you're looking at this chart and you're down here, you're saying, well, where's the first likely spot of resistance you'd be looking at? And the answer was 47.40. Now, I suppose had the market came down here, the first level I'll be looking for would have been about 37, but that obviously didn't happen. So the range that you'd be looking for would start off with the first previous level of support, which coincided with the Fibonacci. And how far would you go up to? Well, this is the range in itself is this in here, even up towards here. But you don't expect it to make another top at that level above 80. That's what you would not expect. So you would think, okay, well, what's the 61.8 to here? We already know that we've already hit that. So therefore, if the odds do show that and this market continues to go lower, I would suspect that we would find a bounce at this level. And this is the area here where I'm looking to be getting into some gold, trading in thus of silver for that of gold. Only smaller amounts because just because this area is supposed to be support doesn't mean that it necessarily will. But my thinking is when it does go down there, just like we had a big bounce like this and a big bounce before at that level, I would expect it to bounce maybe even up to this 29.74 level, and that would be an area where I would sell some gold, basically, back for silver. So that's one way of playing the gold to silver ratio, and I am looking forward to at least test this previous 15-16 level, and if not even go well below it. But that's a conservative level, and wow, 21 minutes and change. So thank you for tuning in, and have yourself a great week. Bye bye.